On today's show, we're going to show you how to track your finances with base cost averaging. So grab yourself a brew and we'll begin right now. When it comes to tracking your finances, there are many ways you can approach it. There are online programs that you can use, or you can track it manually. Today, we're going to do it manually using Excel. So we're going to calculate the base cost average for three fictional companies in Excel. So let's jump right in. Okay, so we're going to start today in Excel. You can also do this in Google Docs. I'm going to take you through three fictional companies. We got Mountain Widgets, Bruco, and the Banana Bread ETF. And what we're going to do is we're going to start in January. So in each case here, in this case here, we had no shares, and we're going to buy 10. And we're going to dollar cost average every month. So 10 shares all the way, and we'll do this right up here to October 1st. We're going to stop here because on October 15th, you'll see here, we've got a little bit of an event. We got to sell. So I'll show you how to sort of deal with that first. So total shares, of course, the first month is going to be 10. Our price is also 10. So that's $10. The value, well, the value is a good number. The value is equal simply to the price times your total shares. So its value is $100. The total cost is equal to the price times, not the total shares, but the number you bought at that time. So that gives you $100. And your overall cost, in this case here, we'll just put in $100 because that's how much we spent. Now our base cost average, this is the number we use to calculate our capital gains and our capital losses with. So it's a very important number. It's very simple. It's actually equal to your overall cost divided by your total number of shares. So $10 in this case. So now here what we have is we'll put in another formula, and equal is always how you start a formula. So in this case here, we had 10 shares, we bought another 10. So this is going to be equal to, well, that plus the new shares we bought. That takes us up to 20. And now if we drag this down, it'll populate for these months, and you'll see it goes up by 10 each. All right, so our price for our second month was also $10. All right, our value, well, our value is 200. It's going to be 10 times 20. So 200. Our total cost is going to be another $100. And I'm just going to close that a little bit. And our overall cost, well, we just wrote it in here. So our overall cost this time, it's going to be equal to our last overall cost plus the new amount that we spent. So in that case, there our new total cost. So it's $200, and then our average should be the same. It should stay at 10. Perfect. The third month along, everything went up to $11, so nice move for that share. Our value in this case is now $330. Our total cost is $110, and our overall cost is $310. So you'll notice right now we're in profit by about $20 when you look at this. So that's kind of cool. So now we'll bring this down, and you'll notice our base cost average is $10.33. Okay, so in April, let's just, we'll pull the rest of these in here. So April, we sold 11, it was worth $11. Then it was worth $12. Then it was worth $11. Then $11. Oh, and then we went all the way up to $20. Oh, this is looking really good. So we'll pull our value down, and you'll see it shows we're up to $2,000 on the 1st of October. And our total costs and our overall cost. So we only paid $1,230, and we're up to $2,000. So we're well into profits here. We're doing really good. And our base cost average at that point is only $12.30. So the 15th of October comes along, and holy banana bread, we're going to sell because that price jumped way up to $25. So we're going to sell 80 of these shares. So that's going to take our total down to 20. Our value is now $500 because we've just sold $1,500 worth. And I guess I shouldn't have I closed this. There we go. So we sold $2,000. That's fine. Our overall cost. Now we can't actually pull this down because if we do, we're going to get some funky number, and I'll show you. See, we get a funky 770. That's just not right. So when we do a buy or a sell, what we have to do is we have to readjust this. So our overall cost is simply equal to our base cost average, the previous one, times the amount of shares we have left. In this case, it's 20. That gives us a 246 overall cost. Okay, so to calculate our gain, the first thing we need is to know how much money we received. Okay, so in this case, we're going to put in -1 times, and we'll use the total cost, which is the money we received back. So that's going to be $2,000. The reason we're using -1 is anytime you multiply a -1 by a negative number, it gives us a positive number, and that's what we're looking for. And we then have to subtract from that another value. So in this case here, it's going to be our dollar cost average amount. So for our dollar cost average, we're going to open up two brackets here. So in the interior bracket, we're going to do another one of these 9 minus 1 times, and we need to go back to that thing that has the 80 in it. So -1 times 80. And we'll close that bracket times, of course, and this is where that number comes in, our dollar cost average. We'll put that in here. We'll hit enter, and there it is. That's our gain. Our gain is $1,016. What we can do is we want to, on our overall page, this is kind of what I have. I just want to know our gains and losses. So we had a gain with those guys. So with our mountain widgets, we're going to put an equal here. We're going to go back to the mountain widgets, and we're just going to click on that and hit enter. And we'll expand this a bit. And you see we now have a gain here. If we come back here, just to sort of show you what happens at this point, we still have another two buys, $10 in November and $10 in December. So this is going to mosey its way up to $40. Now the price is 15. Oh gosh, they sold at the perfect time, 15 and 14. Perfect. Okay, so the value, as you can see, it went down quite a bit, but we took a lot of that money out. And we're still in profit. So our overall cost, now this time here, we can't just drag this down. We need to restart because we did the event. We have to restart. So it's going to be equal to that plus the new amount we sold. So 396, and we'll drag that down. And our final dollar cost average of the year is $13.40. So even if okay, so in this case here, we got Brew Company. So right now we've got $10 a month, and then we have an X in December. So let's just get these in here nice and quickly. So we have $10 a month. All right, our prices in this case are, all right, our total cost, once again, is equal to the share price times, of course, the amount that we bought. So there we go. We spent 100. And our total value, of course, is equal to our share price times our total share. Bang. Our overall cost, because we started at the beginning of the month, is $190. And so this is going to be equal to the previous one plus the new one. Oops. Plus the new one right there. You can see we're definitely not in a win scenario with these guys. And our dollar cost average is simply our overall cost divided by our total number of shares. All right, we've got all of this. Here we go. All right, so in December, we're looking and we're sort of thinking, okay, well, we got that big gain and we don't want to, it's going to push us up a bit. So we want to knock a little bit of that off. So in this case here, we're going to sell X amount. Let's just go with, we're going to go with 50. So we're going to sell 50 shares. Okay, and at this time, it rose up to $11. So we're getting $550 back. The value, 770. Now, cost, remember, we don't just drag it down. It's now equal to this times our number of shares. So 70. So there is our cost. So 1775, it stays the same. Now, in this case here, we're going to be taking a loss. Okay, so we're going to start with the minus 50. So to calculate that loss, we simply put in our equal sign, and we're going to open up our brackets. And once again, we want to make our number positive, so we're going to put in a -1 times, and this is the amount we picked up, so $550. So there is the amount that we gained, Now we need to, of course, subtract from it, and we'll do our double brackets. So once again, in this case here, we're going to be looking at a -1 times, and this is the number that we sold. So in this case here, times -50, that's going to make it 50. So that's going to give us that times, we also have to put in our base cost average. So we'll bring that in like that. Make sure all of our 1, 2, 1, 2, yeah, all of our brackets are closed. We'll hit our enter, and that gives us -337. So we're looking right now at a loss of $337.50. Not bad. However, if we wanted to readjust it, and this is one of the reasons using this formula is nice, we could, for example, go from -50. We could go up to say minus, let's say we wanted to sell 70. We put that in, everything all readjusts, and that now gives us a loss of -472. Now, where we're trying to tax loss harvest about $1,000, we can see that we're almost going to have to double that. In fact, we don't have enough shares. So we're going to do, let's just be brazen, and we're going to do 100, and we're going to have to live with that. So that's going to bring us in $1,100, and it's going to give us a loss of $675. So when we go back to our overall, we want to put our loss in here. So once again, we put an equal, we go back to our page, and we click, and bang. So 675 against 1,016. So there is our gains and losses. So if we wanted to know what we owe, it's pretty basic. In this case here, if we total up our gains, so this could be equal to, now you can sum them up. Now if we had multiples, you would sum it up. And in case of that, you would use sum. And then you open up a bracket, and you basically would say the sum of all of these. And you'll see it's from B3 to B5. So it would give us all of that. And in this case, we're also going to add to it our losses. So we would do another sum. We'll just drop that in there. Bang, bang, and there you go. So we owe $341. We got our banana bread ETF. Well, first of all, let's buy our 10. Let's get our 10 for each of these months. Yeah, we have a BCA of $20, 100 shares already. So in this case here, carrying over from the previous month, we would, of course, reference the cell, but we don't have it for this example. So what we're going to do is we're just going to say our total shares is equal to 100, because that's where we're starting, plus this one. So they're 110. And now in this one here, I'm just going to do it once again, because we don't want to have that 100 added again, plus this one. So it gives us 120 shares. Okay, and of course, for our prices, we have, let's see here, 22 is basically, like I said, it's equal to the total number of shares times the price. There we go. So you notice our value is really high, but that's because we're carrying across, we had 100 shares valued at 20. So that there is 2,000 right there. And you watch this total cost is going to be equal to this times this. And our total cost here will be equal to 220. Our overall cost is going to be equal to, and this is where we would have that number. I didn't put it in here, but we're going to just say, for example, for this one, that it's always been 20. So we're going to go with $2,000. 2,000, of course, plus, of course, this. So we'll bring that in. This makes it nice and easy for now. Base average cost, of course, is equal to this divided by our total number of shares. So 2018, show you what we do when we run into a situation with, and you'll see, as soon as you see something wonky like that, you know you made an error. And here is my error. This one here. So this here is not simply 2,000. So we have to fix that formula. So this one equals to the previous one plus our new total cost. Bang. So there we go. And then we can drag that down, get those all fixed, and it keeps all of our numbers in order. So that's the neat thing about mistakes when you're doing this. Usually you will see the numbers don't make sense. If they don't make sense, you've made an error. Check your formulas, check your math. But in this case here, once again, there's nothing to pull over because we don't have a loss or a win. I know that sometimes a spreadsheet looks a little bit daunting. If you certainly had any issues or if you have any comments or questions, please drop those down below. Also, if you're looking for a way to support our channel, of course, we have our Patreon link down below, as well as a free weekly newsletter. If you've liked today's content, then definitely click on the like button. Next to that, you have your subscribe button if you want to come back and see more. And if you click that little notification bell next to that, it will let you know every time I upload a brand new video. Thank you for watching my video today. Take care, and I'll bid you a fond adieu.